Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now moving into this week, we've got the Fed, and this is going to be a big meeting for the Fed because the market is already anticipating 25 basis points of rate hike in this March meeting, the first one of potentially 3, but would it be potentially 4 rate hikes this year? That is the question that the market will be asking itself. Looking for the dot plots. Will the dot plots move higher? Looking out for the press conference after the announcement from Jerome Powell. Will he be pulling across a more hawkish stance than Janet Yellen? Will the market then have to start repricing for 4 rate hikes this year? If so, the market could start to pull a stronger dollar. We'll be pulling yields higher, and we could see questionable risk sentiment on the back of that. Equity markets, for example, could come under the brunt of further selling pressure. Similar sort of situation to what we saw in the beginning of February when we started to see average hourly earnings jumping higher. Now, the Fed is expected to, as I said, to pull rates higher by 25 basis points, but the question would be, is this going to be the point at which Jerome Powell sets out his stall for a more hawkish Federal Reserve? So that's on Wednesday, and then but throughout this week there are a lot of key events, such as, well, you've got 2 other central banks meetings from the Bank of England and the Reserve Bank of New Zealand, but also we've got this EU summit for Brexit negotiations. We've seen sterling jumping on Monday on the outlook that they are coming close to an agreement on the transition deal. Now, will that be signed off in the summit this week? If not, you're likely to see sterling back down again, so quite a bit of volatility on sterling trades. But also we could see volatility across equity markets with further news of any protectionist issues going on. The trade tariffs that Donald Trump is putting forward are likely to come up in the G20 meeting as well. So still this week we've got a lot of volatility factors outside of normal economic announcements. So what does that leave the forex markets in the outlook? Well, we've seen the dollar looking to position a little bit more strengthening ahead of this FOMC meeting. We've seen euro dollar just pulling a little bit lower, and we've seen a little bit of a rebound in dollar yen. But interesting that whether that rebound in dollar yen can continue, because certainly the yen strengthening has been an ongoing theme through this last week or so. Now the euro has been pulling lower. Euro dollar back actually broke a support at 22.70 on Friday. Does that open up the 121.55 key level of the March low? That's interesting, because that is coming back towards a key sort of band of support between sort of 120.90 and 121.55. That is a key level that I think the market will be looking out for buying opportunities. So if we do see some volatility on the Fed, how long will it last for would be the question, and is it a buying opportunity for further euro strength in due course? That would be the question, I think, that sort of takes hold throughout the week. Sterling broken up above $1.40 on this announcement or this suggestion that they were coming close to a transition deal. Will it hold on to those gains? Volatility through the Fed would cable being pulled lower by a more hawkish Fed. Would that give you another buying opportunity? That would be the question there. Also on dollar yen, the yen strength has been an ongoing theme in recent weeks. It continues to outperform, and not only that, we've seen political risk rising in Japan as well. That is helping to, ironically, strengthen the yen as well. But would any rally in dollar yen last the distance? Would it just be seen as another chance to sell? Because it looks like the yen on the dollar yen is sort of pulling back lower, possibly back towards 100 in due course. Would a little rally that we see on the dollar yen on the back of a hawkish Fed, would that be considered a chance to sell? That would be the question. In indices, equity markets have been seeing a sort of varied performance, really, on the back of this protectionist concern that the markets are sort of playing out. You've seen Wall Street, which has held up pretty well. Compare that to the European markets. The DAX, for example, very trade heavy and export heavy index there being pulled around. Lots of volatility through the DAX. We've seen sterling rallying today. That's disproportionately hitting the FTSE 100 because the negative correlation play between FTSE 100 and the level of sterling. And that's sort of hitting FTSE to the downside on Monday. FTSE is really, really underperforming and not looking all that healthy whatsoever. But can the S&P 500 hold up and continue to trend higher? Can the DAX break higher from its recent consolidation range? These are all questions that I think it could be resolved through the Fed meeting, because if the Fed goes more hawkish, then we could well see equity markets breaking down, because equity markets would be seeing the Fed turning going to a more sort of tighter monetary policy path, and that's not all that great for equity markets. But commodities are another key question as well. The gold price has been dropping back in the last few days, starting to gain traction to the downside. Is it going to break down on a hawkish Fed? I think below 1300 is a really key level of long-term pivot support there. If it closes below that level, would it break and continue to fall away? That would be the question. The oil price is a difficult one at the moment. There's a lot of sort of moving parts in the oil story. We've got not only the dollar strength, but we've also got rising US production, the prospects of a little bit of political instability in terms of the Middle East. You've got Syria, you've got the questions over what does protectionism mean for the Iranian sanctions deal that had been sort of affecting, I think, the oil price on Friday. So these are all questions that sort of meaning that the oil price is a bit of volatility there through that market, and it'll be interesting to see, as again, what the oil price does on the reaction to the Fed on Wednesday. But in terms of our economic announcements through the week, we've got a little bit of UK data to really focus on. Not only obviously we've got Brexit, but also we've got inflation for the UK, we've got average weekly earnings, and also unemployment, retail sales for the UK as well. So all these big numbers coming out all this week. So a lot of UK volatility. I think you can expect sterling to be sort of pulled around on these. Obviously the Fed is the big focus for the dollar throughout this week, but also for the Kiwi, what is the stance of the Reserve Bank of New Zealand going to be, and how they set their stall out, given the fact that growth was a little bit disappointing last week. And throughout that, I think there's a lot of market moves that we're going to see through this week on this economic calendar, but also on these key fundamental events as well. So lots to play on, and I wish you good luck in your trading this week, and I'll speak to you next time. Thank you.